CrowdStrike stock had been dropping for a week or so. Now that the company has announced their earnings, will the stock rally or will it keep going down? I'd like to find out, and I'd like to analyze the company fundamentals and value the company, and then make a decision whether I should buy, hold, or sell this software company. CrowdStrike is in the security software industry, providing software to protect company data from ransomware and hacks. That's become really important. And you hear about companies being hacked or ransomware taking place all the time. It's just a full time operation that a company must really guard its data or it'll be hacked. Most recently, I heard that Ticketmaster got hacked. Over 300 million user accounts were looked at by some hacker, and the data was probably replicated, and that data has been compromised. That's an example of the problem. Overall, this stock's been really going up over the past year, and I wanted to see if this is a good value or if I should wait before I buy stock. I'm not an owner of CrowdStrike, so this would be a first position I take with this company. Before I jump into the analysis, let me just remind you, I'm an individual value investor. I don't provide financial advice. I don't recommend that you buy CrowdStrike stock or sell it. I don't recommend you short it. I don't recommend that you buy options on this stock. I am not providing any financial advice. I'm just sharing my experience, and I hope you find it interesting. I have formed a new partnership with Moomoo. And if you sign up as a new user and deposit more than $1,000, you can qualify to receive 8.1% yield on your cash, which is a great rate. That's a temporary 3-month term. And then you would receive 5.1 after that. Very good rate. You'd also get 15 free stocks. I signed up and I'm waiting to see which stocks I'm going to get. The stocks could be worth $2. It could be worth $2,000. So we'll see what I get. If you're interested, there's a link on the description of the video and you can look into this particular brokerage. If it's the right thing for you to do, you can get signed up. Thank you. CrowdStrike has a market cap of over $70 billion, and the stock has been going up over the past year. The company has a forward PE of 82, which is pretty high. It deserves that because it's a high growth company. It has a strong buy rating by analysts who say the stock's actually 20% discounted, and that's interesting. If we look at their financials, they've been growing their revenue real nice year over year. In the most recent quarter, they announced they grew the revenue by about 33%, which is excellent. Their free cash flows are good, and they continue to grow their free cash flow, which is a very good sign. The most valuable companies on the stock market generate free cash. That's why I use it as a metric to value a company. Last year, they produced $940 million of free cash. I'm estimating they're going to produce well over $1.2 billion in 2024. Looking at their forecast of earnings per share, a number of analysts cover this stock, and they believe it's 20% discounted because the earnings per share is really good. I'm going to use the earnings per share forecast of $4 per share expected in 2024 and use a PE ratio that I believe I want to buy into this company with, as well as a growth rate that's going to be good and aggressive since this company has been really growing fast. I want to value CrowdStrike and determine what I think each share of the stock is worth. And I'm going to use two techniques. First one being discounting their free cash flows that I expect. The second being using their earnings per share and establishing a share price based on the earnings per share that we expect. I'm going to start with free cash flows first. I'm going to go with a aggressive but reasonable forecast of cash flows, starting with the very first year, 2024. I expect they're going to do about $1,175 million of free cash flow in 2024. I'm going to grow the first 4 years by 25%, which is very high growth. And they deserve it. It might be a little aggressive, but I'm going to go with that number. And then after that, they're going to grow at 5% in the terminal value, all cash flows beyond year 4. I'm going to discount the company by 9%, a little bit higher than a big company, let's say an Alphabet or a Microsoft, because they are a smaller company. When I look at all those free cash flows and discount all the cash flows I expect in the future by 9%, I get to a value of those cash flows of $44.5 billion. And I add the cash on the balance sheet to increase the value and take away debt to take away a little bit of value based on the debt that they have. And I get to an equity value of CrowdStrike of $47.4 billion. This company is really flying up in stock price. When I compare the per share value compared against the stock price is 33% overpriced. It's being priced at a premium if we look at the forecast of free cash flows. When I look at earnings per share, I'm going to start with $4 of earnings per share in 2024, and I'm going to go with the 36. I'm going with 36 because they are a high growth company, but can they continue to grow at these rates? Their competitors are going to continue to go after them, and bigger competitors like Microsoft are in this space, and that competitor may pose a risk to their growth. So I'm going with a 36. The growth rate on that earnings per share, I'm going to go with an aggressive 30% growth. And that gives me a per share value of $187 per share. But the stock price is trading at $305. So using earnings per share, the stock's actually priced 39% too high. So when I blend the two, the stock's being priced at a premium of 35%. So should I buy, hold, or sell CrowdStrike? Well, I look at three areas. First, the company, next, the balance sheet, and third, the discount. Starting with the company, I think it's a really good company. Their growth speaks well of how their customers like their products and how their customers get value from their products. So I really like the company and I like the industry. Security software companies are in a very good industry with high demand. I like the management team, very focused on security. All those things are very good. Balance sheet is excellent. They have very little debt. They can pay off all their debt immediately. So the balance sheet's in very good health. The discount is where there's a problem. This is being sold at a premium. And I don't want to wake up 4 years from now with a stock that's worth half the price that I paid for it. I actually want to show up 5 years later with the stock being worth 200% of what I invested in now. Therefore, on this stock, I'm going to pass. I would not buy this stock currently. I would just wait for the stock market to maybe price this stock far lower and give me a better entry point into this software company. I hope you found my video interesting, and I really appreciate you watching.